After World War II, the dollar became the center of the global financial system, and it's stayed there ever since. But something is shifting.
And so the big question is, will this trend continue? Will the dollar lose its status as number one international reserve currency?
The dollar's share of global reserves has been declining since the turn of the century. And since 2015, that decline has accelerated. Central banks are diversifying into euros, into smaller currencies like the Australian dollar and the Korean won, and into gold. At the same time, Washington is flirting with ideas that would have been unthinkable a generation ago. Pressure on the Federal Reserve to cut rates, a debt-to-GDP ratio approaching World War II levels, and talk, however loose, of renegotiating U.S. debt.
We have budget deficits larger than ever, debt larger than ever, and the ratio of debt to GDP is just about larger than ever.
Meanwhile, the BRICS nations are building their own payment rails, testing ways to trade in local currencies, not to dethrone the dollar overnight, but to reduce their dependence on it.
This clear option by Mr. Trump's government toward unilateral or bilateral transactions rather than reinforcing the multilateral structure.
So, what happens next? Is the era of uncontested dollar dominance ending? And what would a more multipolar monetary order actually look like?
I don't see any abrupt tipping point knocking the dollar from its position. The more realistic near to medium term outcome, I would say, is a more multiplex system.
This is Global Insights by Network 2020. Today, the future of the U.S. dollar. Joining us today is Dr. Ottaviano Canuto, Senior Fellow at the Policy Center for the New South and former Vice President of the World Bank, and Dr. Jeffrey Frankel, Professor of Capital Formation and Growth at Harvard Kennedy School and former member of the Council of Economic Advisors. Moderating the conversation is Courtney Doggard, President of Network 2020.
Dr. Frankel, I'd love to just start with you for a little bit to talk a little bit of overview and scene setting. So could you please just explain to us what are some of the historical factors that really made the dollar the world's reserve currency?
So let me first define reserve currency as a currency in which central banks of other countries want to hold their reserves. It used to be pound sterling back on the gold standard and up until World War I. The British pound was by far the leading international currency, and the dollar wasn't in the listings. Then sometime in the 30s or 40s, the dollar passed, and it's partly because Britain became a big net debtor, suffered inflation during World War I, and the U.S. dollar satisfies the criteria for an international currency. It's the currency of a big country with a lot of trade. Its value is pretty stable. The value of the dollar is pretty stable. If you want central banks to hold their reserves in your currency, you'd be better offer them a reliable rate of return. One problem in recent years is exploitation, overuse of what's called exorbitant privilege. The exorbitant privilege is the right to print your currency and have other people hold it, and they have to give you goods or services or hard assets in exchange. You can abuse that by running big budget deficits and printing a lot of money and causing inflation or depreciation. That used to be what people were worried about. But more recently, they've worried about abuse of exorbitant privilege in the form of excessive use of sanctions. The dollar is still by far number one share of foreign exchange reserves held by central banks. But if we look at the down arrow, yeah, it's been declining in share ever since the turn of the century, and it's been declining at a faster rate. Decline accelerated. You might think that people were shifting into euros, which is the number two reserve currency, but that has not been the case, as the yellow line shows. You might think they've been switching into Chinese yuan, but neither China nor Europe has adequately deep, liquid, open capital markets, which is another requirement for having your currency used as a leading international reserve currency. So they're still lagging pretty far behind. Instead, Some central banks are shifting into smaller currencies that you wouldn't think would be on the list: Australian dollar, New Zealand dollar, Korean won, Danish kroner, Swedish kroner. And gold share of dollars in reserve holdings has diminished, particularly since 2015. And it's not that the share of euros has risen. The rest have risen a bit, but it's especially gold that's risen. Now, some of that increased demand for gold is taking the form of an increase in the price of gold, but it still stands that investors, central banks are shifting their portfolios into a higher share in gold. And so the big question is, will this trend continue? Will the dollar lose its status as number one international reserve currency?
Okay, thank you. And then started to allude to this, but what are some of the benefits and burdens that being the reserve currency has conferred on the U.S., particularly in these last 50 years?
Okay, benefits for the whole world. It's useful to have a single reserve, leading international reserve currency, and other international uses of currency like denominating trade and invoicing and so on. The advantages to the U.S. are, number one, just the obvious one, is it makes things more convenient for travelers and importers and exporters and all that, just to be able to do business in their own currency. Number two, it means more business for U.S. banks and the other financial institutions. But number three, the one that's really most important, is seigniorage, which means the ability to print the money and spend it. And that shows up as being able to borrow at a lower interest rate than other countries. U.S. Treasury bill interest rate has been very low for a long time, in part because the dollar and the Treasury bill is the preferred liquid reserve market for everybody. Also, there are, an advantage is geopolitical power, the ability to more likely enforce sanctions. Disadvantages, there are disadvantages. It's not all just advantages. And it's interesting that when the yen and the mark seemed to be rising as international currencies, the Japanese yen and the German Deutschmark, the business sectors didn't want it. They were opposed to increased international reserve currency use. And the reason is that they feared that upward pressure on the value of the currency and more variable pressure on the value of the currency would hurt their exports.
Okay.
On net, I think it's a beneficial thing, however.
All right. Thank you. Turning to you, Dr. Canuto, for the rest of the world, and I realize that that's a very large swath to cover, but what has it meant to operate in an international system anchored on the US dollar? And then if I can append another question to that, we've heard a lot of talk recently among the BRICS countries about an alternative to the dollar, but this isn't the first time that we've heard such talk. Do you feel that this kind of talk is meaningfully different from the kind of post-1971 conversations, or do you kind of see a real medium-term momentum toward a BRICS currency or payment system?
Right. Well, it's a pleasure to be here, particularly with such a company. See, any talk about common currency of BRICS countries, it makes no sense. There is no basis for that, okay? Well, we should keep in sight what exactly is the BRICS, particularly the BRICS Plus, and the World Bank. The BRICS were simply, boost the Professor Frankel rightly observed that you have international money both as a means of payment and as a reserve of value, right? And the two functions, of course, tend to reinforce themselves, but they do not exclude possible increase, for instance, in the role of payments. A short story on why we don't see any possibility of the Chinese renminbi rising to the stake of challenging the dollar and so on. Mentioned by you and the times in which the magnificently Professor Frankel described the rise of the Deutschmark and the yen and so on. SDR has always been limited to being an accounting money by the IMF, but the euro fell short from, as Professor Frankel highlighted quite well. It doesn't It is not a fiscal union. It doesn't have the liquid assets, the volume of investment grade assets to offer as reserve of value and so on. But now, with respect to China and the BRICS and other countries, there is a difference. And let me highlight on this what is different now. First, building blocks already exist. If I may have my chart one, my second chart, which is one that highlights how we have, no, the previous one, please. Yes, this one. Yes, thank you. See, now there are different national rails, let's say. The SIPs from China, the UPI from India, the MIR by Russia, the PIX by Brazil. And there is also digital payments expertise. So the BRICS are not starting from zero in this payments platform. And indeed, the recent cooperative work has focused on interoperability and some cross-border prototype, often labeled BRICS Pay or BRICS Payment Platform. That makes a difference when it comes to payments, of course, relative to the past. And obviously, the sanctions and geopolitics accelerated the momentum. But the fact of the matter is that technology lowers some of the traditional frictions. Now you have messaging systems, tokenization, and cross-border application programming interface that make more technically feasible than in the 70s until the 90s. Okay, so the point is that in the short to medium term, one can expect some partial de-dollarization when it comes to payments, but not any sort of a wholesale dethroning of the dollar. We are watching more trade invoicing in local currencies, more regional payment rails, and partial diversification of reserves. This will lessen the dollar's share in some corridors, in some sectors, and it will create pockets of alternative structure. But still, the key barriers to dethrone the dollar still remain there. That is to say, as Professor Frankel highlighted, the death and liquidity of the U.S. asset markets with no alternative, legal and institutional trust, unless any drastic movements are made on the U.S. side, the openness of capital markets, and the simple network utility of having a single dominant unit of account, okay? And of course, Madame Lagarde, the president of the European Central Bank, in a very good speech in Germany earlier this year, outlined an agenda very much compatible as well with Peter Draghi's report, outlining what would it take for the euro to become an alternative. But that's a long and hard way to cross in order to make it an alternative. So, in a nutshell, I foresee a huge development in expansion. Think of the trade, the bilateral trade. China has become the #1 destination of exports of most of South America, just to give an example, #1 client. So that makes possible, if the country's pursuit is not automatic, the use of local currencies that might boost the use of the renminbi as well as the local currencies. See, this has a history. Latin America had a program of bilateral use of bilateral currencies to economize the need of precautionary reserves in dollars. But as the reserves of these countries grew, and there was a default by Venezuela anyway, it's being dismantled. But the point is that, there is a scope to go in terms of payments that can be pursued by, and it is already rising.
Thank you. Why don't we jump off from there, back to you, Dr. Frankel, to pick up on some of what Dr. Canuto was saying about the hurdles. How are current U.S. policies, things like tariffs, sanctions, interest rate pressures, political noise around Fed independence, how are all of those policies and talk impacting some of the various roles that the dollar plays worldwide? Why don't we start with that?
So the factors you named there and some others are working to undermine the role of the dollar. The decline in the dollar is a long-term phenomenon, so it's not just what's been going on lately. But as I mentioned, the process has accelerated since 2015, which, among other things, is the year when the U.S. applied the sanctions on Russia with the invasion of Ukraine. Number one, huge budget deficits. We have budget deficits larger than ever, debt larger than ever, and the ratio of debt to GDP is just about larger than ever. The economist's definition of unsustainable debt is debt that's not just rising, but is rising faster than the size of the economy, faster than GDP. So the ratio of debt to GDP is rising. And the peak, as I was saying, it was 1945. It came down throughout the post-war period up until the 1980. And it's been going up since, with the exception of the late 90s. It came down again a bit. But more recently, it's been growing at an accelerated rate. And the gridlock in Washington, it's worse than gridlock, suggests that they're not going to come together anytime soon, the two parties, to solve the problem. Debt to GDP peaking in 1945, and we're now really at the same level again, or just about to reach the same level again, with no sign of diminution. That's one factor. Pressure on the Fed to print money, lower interest rates, and with the attendant likely increase in inflation is a second reason for declining use of the dollar, declining shares of central banks' holdings of dollars. Indiscriminate use of sanctions. I don't count the 2014 sanctions against Russia for invading Ukraine as excessive or irresponsible, but there's been others. Number four, just in general, the chaos in Washington, the unpredictability, the undermining of confidence in the word of the U.S. president, the crazy tariffs, which are bad economically, but they also violate international agreements blatantly. International agreements which we led the process of negotiating. Gratuitous ruptures with allies, quitting international institutions, undermining the independence of the Fed, and flirting with default. It's not just that the debt to GDP ratio is rising, it's that the White House isn't even paying lip service to the principle, it seems, currently. Trump has said he loves debt, that there's things you can do to renegotiate debt, which that means default. So you've never had a Treasury Secretary or a president before saying anything that could be interpreted by investors as maybe I shouldn't have confidence in the 100% safety of the U.S. But the current administration seems to be going out of its way to flirt with that. All these things undermine the position of the dollar.
Thank you. I just want to be cognizant of time because I want to be able to get to audience questions as well. And if you're listening and you have a question, please feel free to put it in the Q&A box. Dr. Canuto, I want to turn back to you. You've covered some of what I wanted to talk about when it comes to China already, which I think is useful. What I'm curious to hear from you now is whether you think that there could ever be, because what I'm hearing is that there's almost, kind of maybe I don't want to say fragmentation because that seems like too strong a word, but just a slight recalibration in terms of, where, how transactions are being done and where reserves are being held. Is there a plausible tipping point at any point? Is there a time at which things change to the point where all of a sudden, it accelerates? And what indicators would you be watching to know whether countries are gradually coordinating around an alternative currency, or that, the US dollar is, on an upward surge again?
Right. See, I don't see any abrupt wholesale tipping point knocking the dollar from of its the position. See, the more realistic near to medium term outcome, I would say, is a more multiplex system where the dollar stays central for global funding and safe asset needs, while several regional or functional currencies, the renminbi, the euro, eventually, any basket of platforms, they grow in transaction and corridor roads. And that has been the push, particularly made by think of what China has been doing is replacing in transactions and indeed building and expanding the payment rails and clearing. China has been promoting offshore renminbi liquidity and market centers, Singapore, London, Hong Kong, and so on. And it has encouraged state actors to use the renminbi in trade and finance and so on, but not to the point of being able to substitute the dollar and establish another system around the reserve value function. But indeed, the figures point clearly the rise of payments done in renminbi. Now, having said that, the question is the extent to which these systems can coexist, right? And indeed, look, if I may take my fourth chart, the one that shows the network of swap lines signed by the PBOC with particular countries. That's my chart for it. Anyway, I can go around. Look, that's the one. Great, thanks. See, one may think of the external financial defenses of countries as comprised by, on the one hand, of course, the country's own national reserves, and another one, which is the global safety net, which with the IMF at the center, providing global liquidity for all of the countries, using the SDR to swap currencies and so on. But there is an intermediate layer that has been tentatively developed that appears, particularly in moments of crisis, which are the bilateral swap lines between central banks, as the US did, as the Fed did during the pandemic, and before that, as the euro at a certain moment also developed. And China has moved in that direction. And signing bilateral swap lines with individual countries. And by the way, 2 years ago, before President Milei took over, that was the swap line between the Central Bank of Argentina and the PBOC that allowed Argentina to avoid the default to the IMF, right? It's quite important because the tentative response by Scott Bessent more recently, it's implicitly a way to show that also the Fed, the United States can perform that role. But my point here is that, and by the way, of course, given the inferiority of the renminbi as a means to intervene in markets, these bilateral swap lines between the PBOC and countries have not been used more frequently. But having said that, they are there. This is a way by which we're going to see in that intermediate layer of reserve, that is, say, the one provided by central banks, something like this. Also, of course, one should differentiate this from the idea of trading in local currencies. The only advantage of trading in local currencies is economizing on the need to have precautionary reserves in dollars in order to intervene in the markets. But I would, since you asked me, if I am someone watching this, I would look at the reserve allocations. I would look at the share in global payments, comparing SWIFT with SIPs and so on. Yeah. I would look at the openness and depth of sovereign bond markets and liquidity of repo and derivatives markets. I would look at the foreign exchange market turnover. I would look, of course, on the evolution of the legal, regulatory, and convertibility systems, and so on. But I don't, in a nutshell, I guess the most likely scenario is watching a transaction growth without reserve shifts. Okay. But with the three happening, in simultaneously and co-living.
Yeah. So it sounds like we could adapt to this multiplex world and just keep an eye on things for a bit. What do you think a coherent U.S. strategy to preserve confidence in the dollar might look like?
Well, the trust is important if you want investors around the world to hold your debt, your bonds. It's important if you want to maintain this number one role as an international currency. And we're losing trust. We had tremendous amount of trust after World War II and accumulated by virtue of, in essence, really leading the world during this period, which is, let's not forget, the last 75 years have been unprecedented in human history so far as we know for peace and prosperity. And a lot of that is due to the international institutions like the IMF and World Bank and the GATT and the WTO and so on, the UN, I guess. And we're throwing away U.S. leadership. We're violating. So you asked the question the other way. What could we do to restore, to protect the use of the dollar? I mentioned putting the budget deficit on a stable path, for a sustainable path for the long term, emphasizing the independence of the Fed and not pressuring them to lower interest rates. Abiding by law, both domestic law and international agreements, like the rules governing international trade, and just not talking loosely about the default as a possibility.
Yes.
Not talking about the capital controls or the danger that it might be a serious strategy for the U.S. to force international holders of treasury bills to convert them into something else, which would essentially be default. Let's see. Well, just the other ways in which we've got chaos currently, bringing back some stability and some rationality to the way we run the government.
Yeah. May I add, Courtney, something to the great response by Professor Frankel? See, of concern, this clear option by Mr. Trump's government toward unilateral or bilateral transactions rather than reinforcing the multilateral structure. As I tried to convey in one of my answers, more than ever, we need more lending space by the IMF. The existing space, despite the issuance of SDRs, is really limited. And in that regard, the lower preference by the current government with respect to multilaterals, and that includes raising the capital of the World Bank and so on. On the contrary, there was even the threat of leaving the World Bank. So it doesn't bode well in that regard. Whereas the attitudes or examples like the movement made by Scott Bessent toward Argentina is illustrative of this bilateral. And Professor Frankel remarked quite well the looming threat coming from the fiscal side, and also on the threats to curb the autonomy of the central bank, of the Federal Reserve Bank, right? We didn't have the time to discuss here. Fortunately, the idea of a Mar-a-Lago Accord has been sidelined, particularly as the dollar has devalued and so on. But it stays there. The idea of forcing interest rates to be low by force in order to, it's what we call fiscal dominance in monetary policy making. And of course, we have seen examples of this in the policy choice made by Stephen Mirren at the Fed, but which may increase as we have the replacement of Mr. Powell and all the others, governors and so on. That would jeopardize the credibility on the monetary policy, on the role of interest rates paid in by treasuries and so on. That would be a blow on the view of the dollar as a safe asset and so on. I would put the
and in doing so, it could then backfire, right, in terms of the interest rates.
That's right, exactly. As all the experiences of fiscal dominance of monetary policy have shown in the region where I come from, in Latin America.
Cryptocurrencies. What is the future of Bitcoin in relation to this discussion? What role do cryptocurrencies play?
So there's certainly some that consider the cryptocurrencies a good contender for the new reserve asset that takes over to at least some extent for the dollar. The cryptocurrencies like Bitcoin and the others don't really fulfill much of a useful function. They're so volatile that they don't have a fundamental use, with the exception of evading tax law and smuggling and kidnapping and terrorism and all that. So if the cryptocurrencies become a large share of the international monetary system, I think it'll be probably bad news. It'll be associated with a breakdown of international law and order.
It's true. And if I may just add, yes. I hope Professor Frankel is right when it comes to the magnitude and significance that stablecoins might acquire. Among other things, because stablecoins, if they get big enough and relevant outside the U.S. particularly, they could erode the control by the government of over money and debt, right? And that would lead to a reshaping of the way by which our economies nowadays manage inflation, stabilize markets, and finance public spending. Besides the fact that it tends to replace the senior age. If it becomes fully fledged, senior age that instead of being appropriated by states, it is appropriated by private agents, and naturally, by the way it functions, stablecoins are friendly to an opportunity for individuals, for emperors. So one should not underplay the challenge associated with the rise of stablecoins.
So I think the big takeaways, because we're at the end of time, is that the international financial system is going to be looking a lot like the international world order, which is it's going into this multiplex domain, and we don't quite know where things will go from here. But it sounds like for now, with the lack of better alternatives, the dollar is the world's reserve currency, and we'll just kind of see a slight shifting in what's happening with the others. And I really appreciate your coming on today to help us illuminate that. So thank you. Dr. Frankel, Dr. Canuto, thank you so much for your time today. I really appreciate it. Take care, everybody.
Thank you for joining us on this episode of Global Insights. You can subscribe to Global Insights on Apple Podcasts, Spotify, or wherever you get your audio. For more analysis, events, and ways to connect with our community, click on the link in the description. See you next time.